Hey traders, my name is Alexander Nikitin and welcome to the Forex market analysis video. And before we start, I need to put a kind of disclaimer. The information provided in this video is only for educational purposes. It should be in no way used as a recommendation for buy or sell. Okay, let us start. My software that I have created, MPS Pro and MPS Automatic, drew these pairs for my analysis. And the analysis is done. We have a cipher pattern on 4-hour Aussie Canadian. We have a Canadian unified godless that is setting up. If you trade unified godless, if you don't trade unified godless, maybe you should skip them. Euro Aussie has a cipher on Euro Aussie 1 hour. Euro Yen, we have a unified godless setting up that already completed on 30 minutes. It is actually 1 hour, but I am going to execute that on 30 minutes. And we have New Zealand Canada cipher that is setting up, and Dollar Canadian cipher that is setting up as well. So these are the pairs. The analysis is done, so they are the pairs that I'm looking at. They are drawn absolutely automatically by my MPS software, so no need to spend thousands of hours in search for the best setups, the high probability opportunities. So with having that software, my customers are mostly focused on the way to how execute the trades, and on the way to build up the winning portfolio to get that diversification, and this improves the trading results radically. Okay, and let me talk about the execution using this Euro Yen as an example. Okay, so based on conventional advanced patterns rules, we should place a limit order here at the completion of the pattern, and the stop loss at it varies radically from trader to trader, but 113 is seems to me one of the most common stop loss placements. Maybe some 1 ATR below the X point, maybe 10 pips below the X point. Different traders use different methods for stop loss placement, but 113 is one of the most common stop loss placements. Okay, so what I supposed to do based on my market research that I have done, I've done the analysis of 10 pairs. I found more than 10,000 setups, and I have analyzed all the losers, and I have analyzed all the winners, and I came to conclusion that the majority of losers move this way. Let me use my drawing stuff. Suppose this is a pattern. I drew a cipher pattern this time. This is the 786 completion. This is the 113 invalidation level. Yes, the majority of losses move this way. Price enters this zone. It gives you a kind of reversal or something like this. Then it starts moving sideways, and then it reaches the opposite side of the reversal zone. This is one of the most common stop losses. And the second one is this. Boom, one candle through. These are the two most common stop losses. So if you simply avoid them, you will increase your win rate. You will simply increase your win rate. But you cannot do that if you place a limit order here. You see, as soon as price touches this level, as soon as it touches your limit order, what happens? You are in. You are already in the trade. What you can do after recognizing that, you may exit. Yes, this way you will cut your loss by half. You may exit if you recognize this formation, but you never know that it was that formation until you actually hit the stop loss. And in this situation, when the price moves vigorously from one border of your reversal zone to the next border, to the opposite border, you simply cannot do anything. You simply need to accept your loss. So I came to the conclusion that aggressive method is not the best one for this type of pattern trading. And what I suppose to do is this: wait for price to enter here. What we know for sure, by the way, based on my backtesting result, somewhere within this zone, maybe lower, maybe in the middle, maybe closer to the upside border, we have around 57% probability of reversal to happen. What is the reversal? The reversal is the bounce to the downside, at least touching the 382 measured from here to here. Or if price gives a reversal slightly higher, somewhere here, yes, then it is the bounce from here to here, the 382% of this movement. So we have 57% probability of this scenario to happen after price enters this zone from here to here. We have 57% probability for reversal to start. So now we will try to build a trading plan based on this information. If you simply enter that, you have 57% probability, but because you are restretching your targets, your average risk to reward on this, well, let's talk about this cipher, is 0.64. So if you will win 57% of time and you will only generate 64 cents and lose $1, you will be losing money overall. To generate money, at least to stay break even with this risk to reward, you need to win 70% of time. And based on my market research, based on my backtesting that I've done with MPS Pro that finds thousands of patterns absolutely automatically, both on history and for real-time trading, based on that profound research, this is very hard to achieve 70% win rate probability. It is very hard. Not every pair can do that. Some pairs do, yes, I know. Some pairs even have 80%. 86% is the best that I witnessed. But majority of pairs don't. First of all, you should know the pair, let's say euro-dollar. Second, you should know the time frame, let's say 4 hour. Third, you should know the size of the pattern, the swing identification algorithm. It may be large, it may be medium, it may be small, or whatever, or it may be a mixture of them. You see this? So my software allows you to tune it up to make it absolutely, how is that called? Absolutely precise. So if you know that large patterns on 4 hour on euro-dollar present the best, then you simply set the settings. How do you know that? Do the backtest. The backtesting is done as a blink of an eye. Simply calculate how many patterns win this way or how many patterns win that way. But many of you may have a conflict of beliefs. Maybe it's not the way that is appropriate for you. So you may argue, you may say, you know what, Alex, I believe that every market is the battle between buyers and sellers, and it is purely based on human psychology, yes? And human psychology stays absolutely the same regardless of the time frame and regardless of the chart and regardless of the swing identification algorithm that one may use. It stays the same. The two forces, the greed and fear, are basically moving the market. So I don't believe in that some pairs, some patterns have better performance on one pair and some patterns are having worse performance on one pair. This may be accidental. Maybe, Alex, 10,000 examples that you found may be not enough. Maybe you need to find 500,000 of examples, or maybe 1,000,000 of examples. Well, I will. In future, maybe I will find a bit more. The 10,000 of examples I have right now tell me something different. Okay, we may have doubts about this situation. Yes, the results are differ very much, and they are very depend on the swing identification. They very depend on time frame, the pair, and so on and so forth. So, what independent? What is the independent stuff that works on each and every pair? What is the no doubt situation? The no doubt fact is that it works 57% of time to hit 382 if the reversal takes place. If the reversal doesn't take place, we have the 43% of losses. So what can we do? We can avoid these situations. Yes, we can avoid these situations if we simply wait for a reversal to appear. Don't enter with limit orders. Simply wait it here, here, and as soon as reversal starts, for example, the candle with a lower low, lower close, something like that, that closes lower than this. You see that? You enter here. If the reversal started and if it is a true reversal, this means that you have a 57% chance for the reversal to continue rather than to go higher. So in this case, you don't need to risk this distance. The only distance you need to risk is, let's say you enter here, from here to here. Because if price goes higher than this top, it confirms that your reversal was a false reversal. It was something from this area, yes? So price went higher and it confirmed that your reversal was a false reversal. So you only risk this distance and your risk to reward is increased radically. Okay, what are the benefits of them, of these methods? First, you increase your probability because you avoid those situations that are blowing out through this reversal zone. You avoid those. Let me delete this stuff. Okay, you avoid these situations. And you know what? This will help you increase your win rate probability to 63%. Instead of having 57, you will have 63%. It is 6% improvement. But guys, you have 6% improvement for your winners. You have 6% more winners. And at the same time, you have 6% less losses. So as a whole, it is 20% improvement. Or 12%, sorry, not 20. 12% improvement of your strategy. Okay, 63% of improvement because you simply avoid 6% of trades that move this way and you avoid those 6% of losses. Next, when the reversal starts, if it is a true reversal, you have 57% probability for it to move this way, yes? Because you simply calculated that somewhere within this zone the reversal should be. If it is a true reversal, it will continue as a reversal hitting the 382 rather than it proves it was a false reversal, rather than it moves this way. So this is absolute for sure. And what it gives you? A risk to reward. So the second improvement that you do is you increase your average risk to reward. Of course, sometimes you lose a substantial part of the movement because when you wait for this completion, price may move some distance towards your take profit, and if you enter at market, maybe you will have worse risk to reward. What I do in these situations, I calculate the at least 1-to-1 risk reward measurement and I wait for price to give me a bounce to enter, and only then I enter to have that stuff. And this leads that on average I have 101, yes, 101, 1.01 average risk to reward. This, sorry, not 01, 1.05. 1.05 average risk to reward. 63% probability, 1.05 risk to reward. What it gives me? It gives me this equity curve instead of that. Okay, think it twice, do the backtest, find as many examples as you can. And what is most important, analyze the losses. If you know that the majority of losses move this way or they move this way, you can simply avoid them. This way you will improve your probability, and this way you can improve your risk to reward, placing your stop loss slightly higher than the top of your reversal. Or maybe you can use a fixed amount, as I do. I use the 3 ADR stop loss. Okay, let's go back to analysis, to real-time trading. So what do we have here? My reversal signals. I need to draw a diagram for you. So what should be the candlestick formation for me to tell that we have a reversal? So let's suppose they are candles. They are green because we moved to the downside. And this candle should be red. That's it. As soon as this candle closes, I have an entry. So at the close of that candle, I enter at market. Of course, I need to measure my risk. This is my risk. As I told you, it is 1 ATR, 42.1 is my risk. So I simply measure it and I project it here as my take profit. So if I enter at market from here towards my take profit, then I have a trade with a risk to reward being positive. My reward will be greater than my risk. Okay, next, this is the situation number 1. Situation number 2, another pattern that I use to enter, I call them minor patterns, is this. Sometimes this candle does not have a lower low as it has in the first example. It doesn't have a lower low. It is somewhere in the middle, an inside bar, something like this. What I do in this case, I wait for the second candle to close above the body of the previous candle, of this one. Okay, this is my entry number 2. And my entry number 3, I think they are all situations. You should understand the main principle of that. Close above the body. Okay. And this candle is green, like this. And we do not have a lower low, but we have a higher low, like this, higher low. And we also have a close above the body of the previous candle, not above the high, but above the body. So it will also be my entry signal. So entry signal number 1, entry signal number 2, and entry signal number 3. Of course, if we have an outside bar like this, this will be both. First of all, it has a lower low, and second, it has a higher close above the previous close. Yes? So we have them both. That's why I don't tell you about that situation that is number 4, but it should be mentioned. Okay, number 1, number 2, in case we have an outside bar, it can be red as well. It doesn't matter. This one can be red as well. The middle one, the outside inside bar, it can be red as well. What matters is the close above the body of the previous candle. And here, what matters is the close above the body of the previous candle. So when we have a kind of, this is called a harami, yes, and we may have a kind of hammer or doji or whatever, then the trade is executed when we close above the body of the previous candle. Okay, now let me delete that stuff. Hope you have written it down, and let me go into the details of this particular trade. So the pattern was completed as price crossed this 130.054. So let me zoom it in. Next stuff that make sure that this number 63.2 is greater than this number of 3 ATR. This is my method of how to choose the time frame to execute the trade. For example, if I switch that on, you see the patterns that are drawn based on 30-minute time frame. Yes, and then if I switch that to 1 hour time frame, you see the patterns that are drawn based on 1 hour time frame. Something like this. So if I wait for 1 hour candle to close here to print, yes, I may miss my opportunity because 1 hour candles are pretty large. That's why I switched to 30 minutes. But how do I know when I switch to 30 minutes, to 15 minutes, to 5 minutes? Maybe I need to execute my trades on 1 minute. On 1 minute, I will have multiple patterns, multiple reversal evidences. Yes, it is pretty simple to find something on 1 minute. Okay, so that's why I have created this number, the 63.2. It is basically the distance between this completion and the initial 38.2. So it is 63.2 distance from here to here, the initial. And this distance should be greater than 3 ATR distance that is printed here. You may use your inbuilt indicator, ATR indicator, and if you run it, you will have it in the separate window. Okay, so it tells me that 632 is greater than 644. I need to switch to lower time frame. Yes? Okay, and now what it tells me, let me switch it back. Let me switch this off, and when I switch to 30 minutes, I only have patterns that were drawn on 1 hour on my previous time frame. Yes. Okay. I stretch my fib here, and as I told you, this candle does not have a lower low below the previous candle. Yes, but it is an inside candle. For an inside candle to be turned into a signal, I need next candle to close above the body of the inside candle. Let us see if we have a close above the body. So this doji has what? It has close of 130.178, and this candle has close of 130.178. So the body of that and the close of doji are absolutely even. So what I do, I look for the next opportunity. So that was not a reversal. I do not enter. I have an opportunity to enter lower. Maybe next candle, maybe next will give me a reversal. And I always know when to go and to look at my charts. It is 22 minutes left for this candle to print. If it closes bullish, if it is a green candle, it will be pretty cool, because first of all, we have that lower than the previous low, and if we will have a close higher than the previous close, it will be pretty cool. Well, that's it for today. Hope you understood the execution technique. As for the stop loss, I personally use it this way. The 3 ADR 422. Let me measure that. 422, and this should be 0. Yes, so we know that the difference between the two is 422, like that. This is my range. When I execute my entry, for example, this is my entry, I need to place the 3 ATR to my stop loss. Yes, and what I mean, I always need to have at least 1-to-1 distance. So the distance towards the 3 ATR should be at least the same as my stuff, as my risk. It should be at least the same. See this? Very simple. So if this rectangle is not overlapping this rectangle, then it is cool. At least I should enter somewhere lower this rectangle border. I should enter only lower than this rectangle border. So let me keep this rectangle on the chart to see my minimum entry level. So I should enter lower than this border. And if price goes lower, the rectangle moves lower and lower and lower, giving me lower entry. So what I need to do, I simply need to wait. No limit orders, no rushing, nothing at all. Okay, I will come back to this chart in 20 minutes. Next opportunities are done absolutely the same way, at least with my trading. By the way, this one is going to complete. Pay great attention to this. If you want to have my numbers, we have 29.8 and the ATI is 49. So I recommend to execute this trade. I will execute this trade. I don't recommend you execute this trade. It should be 29.8, 30 minutes is not the time frame for execution. 22.9 versus 29.8. The 15-minute is one that is proper time frame for execution. 15-minute is cool for this execution. Canadian yen. By the way, we have some kind of confluence. Canadian yen and Euro yen. They are all completing the patterns, and if they give a reversal, we will have two trades running into same direction. What it leads to, we have two yen pairs, two trades. It is called doubling your risk because the pairs are highly correlated. Something is moving yen to the downside, moving yen to the upside, and those pairs that are opposed to yen, they are of course moving to the downside, yes? So the yen becomes stronger. Maybe some news released, maybe something else. But the yen is becoming stronger. So be careful. Maybe you need to split your position into two and you open half on Canadian yen and the second half on Euro yen in order not to have a double risk because they are highly correlated, yen pair and yen pair. Try to be diversified. This is another, let's say, hint that will help to improve your trading. Instead of a large loss that may happen in case of both of them hit stop loss, and you first need to think about your stop losses, you need to think about the preservation of your capital. Instead of having a double loss, you will have a single loss. If you trade, split your position by two on highly correlated pairs, correlated 1, correlated 2. Well, that's it for today. Hope you like this video. If so, give me a thumbs up, share this video on social media. If you want more videos and you want to stay notified about this, hit that subscribe button. If you are interested in my software, you are welcome to visit my website www.ps-software.net. My software is called Monster Pattern Search. First of all, watch these two videos. They are very high important videos. The introduction video and demonstration video. They are 1 hour, and the second video is also 1 hour long. So absolutely detailed explanation on how the software works, on how it draws the patterns, on what problems we have with manual identification versus automatic identification, and so on and so forth. Very interesting information in these two videos. If you are interested in drawing your patterns manually, the old school, using your Fibonacci and blah 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 triangles, you can learn the rules of that. Simply click that learn the pattern, hover, learn the patterns over this tab, and click on whatever you are interested. Godly advanced formation, maybe crab harmonic pattern. Whatever you click, you will have an absolutely free detailed description. It is a trading course because you are not only taught how to identify the pattern, you are also revealed the secrets of how to execute this trade. Of course, there are conventional rules of execution, and they have they do not actually resemble what I taught you in this video, because my own investigation, my own research is the result of my own backtesting. Yes, my knowledge is the result of my experience, and so on. It doesn't need to be to coincide with conventional rules. So conventional rules are conventional rules. First, start from conventional rules, and then as you progress more and more and more, you can add something of your own. This way you will make your trading more and more personal, and it will suit your personality better. Okay, now that's it. Hope to see you next time.